today's session of Trade Along Live with Saul. Should see a series of 3 charts in a separate chart window. 2 time frames for the S&P 500 E-mini and a 30-year bond chart. Hey, Don. Hey, Mark. Welcome aboard. Hey, Mark, you've got like a ghoul in your picture because I think you got the you got to open it up and then close it again. I think
that's an improvement for him.
See, it looked like
good morning, everyone.
a ghoul.
Yeah, that's an improvement for him. It's good. Can everybody hear me all right? Hopefully you can see the charts now. Should be able to see the charts. All right, let's give you our levels for this morning. Our pivot this morning is 42.30. 42.30. Resistance above at 41, 49, 58, 67, 75. Support below at 20, 10, even, 42 even, 41.89, and 80. All right. Well, I'll repeat the levels again. Our pivot this morning is 30, 42.30, support at 20, 10, even, 89, 80, resistance on the upside at 41, 49, 58, 67, and 75. All right, welcome to some of the new folks that are here. We are trading mini S&Ps, looking for opportunities to scalp the market based on the levels we just gave out, in addition to price action opportunities that might occur once the market paints some bars. Combination of both of those gives us our opportunities to trade and scalp the market. And with the volatility where it's at, we're probably looking about 4 or 5 points on our stops and profit targets. But again, not everything is etched in stone here. We can adapt to that, to market fluctuations and activity, and also a lot of things go into play here in regards to finding what those profit targets are. But at the beginning, at least at the beginning of the day, we're looking at about 4 or 5 points, and that varies. We are always sensitive to the fluctuations and the volatility on any given day, so that could change, and we might have to change that up or down. Who knows, right? We just don't know, because every day brings its own set of dynamics to the trade, to the day. But anyway, every day we are focused here on trading S&Ps, mini S&Ps, looking for scalping the market opportunities against the levels we gave out, like I said. And then there are price action opportunities that occur. And so we'll see what happens. So we are trading right now on the heels of the GDP number that came out already this morning. And it was a negative number, which is what we talked about in regards to a hard landing or a soft landing. And obviously, with the negative number, it's the first how you consider, or how the economists consider a recession or not, is when you have 2 consecutive quarters where you have negative growth. So they were expecting plus 1.0 on the GDP number this morning, except it came out at a minus 1.4. So we have a contraction here, at least initially. And we'll see how the market reacts to it. Usually when you have a contraction, you would expect the Fed to lower rates to try to help expand the economy, but they're doing quite the opposite. And there we have the dilemma that the Fed is in right now, where they are in the midst of raising rates and being very hawkish, and considering the fact that we are having a negative growth 1 quarter already, which again foretells probably recessions on the horizon, quicker than we thought, actually. This is where the dilemma is, as we quickly come down here to the 20 area, where we have a little bit of support. Where I was thinking of talking about the 30 with the 41 area. Now we quickly rotate down. As you can see, the volatility is still in the market, very, very moving very, very quickly. And if you can't handle the volatility, just be patient and wait for the market kind of to settle down a little bit, as we have a nice quick rotation here off of our 20 area. So nice little quick little scalp there if you were able to jump in. Nice little rotation. We got 4 or 5 points here, 4 points for sure. And hopefully maybe you were able to jump in there and take advantage of our first support level there at the 20 area. Again, we are just trying to find areas of inflection to give us an opportunity to trade. Our next support level on the downside is down at 10. But nice rotation there against our first support level at 20. Good way to start the morning. And again, if anybody has any questions, feel free to ask in the chat. Don, could you see the charts now? I think they should be able to see them, right? No problem. Hopefully. Again, if anybody has any questions, okay, good. Feel free to ask in the chat, and we'll see what the market brings. Obviously, again, the fact that we had the first GDP number that came out this morning and was, like I said, had negative growth is a little concerning to the market. And as you can see, what does the market do? It rallies. Well, it's kind of a little bit on the a little bit pressure right now, but it's you would have thought that you're dealing with a big sell-off. It did it's very the market is very, very difficult to trade. That's why we pick our spots. We wait for opportunities. We're very we try to be patient. As our next support level on the downside we have is down at 10. And try to take advantage of the upside. Now we like to average, I would say, about 4 or 5 points, 4 or 5 trades a day. Obviously, yesterday with the movement one way, then the movement the other, and then another movement the other way, we had minimum. I think I probably doubled that or more, depending on how aggressive. You could have easily traded 15 or 20 times yesterday if you were trading all day. We also focus on the morning hours. Again, for those of you who are new here, we try to focus for the first couple hours of the day. I think it gives us good opportunities with the dynamics of the market. Trade well for what we're trying to do as far as scalping. The afternoon trade gets a little bit more trickier. The dynamics of people who are trading, also the number of people who are trading gets a little bit, it's different. It reacts to news differently. I don't know if you were watching yesterday, but around noontime, there was a erroneous report coming out from, I think, Bloomberg that said that Facebook's earnings were leaked and that they were going to have a negative, they were going to miss earnings by, or revenues by $2 billion. And that created a flush to the downside really, really fast. And then all of a sudden they said, no, it's not true. And then they rallied the market right back up. So these are the things that we talk about that we have no control over. And obviously most traders don't have control over when you put out some stuff that's not true, but the market reacts to it anyway. And that's why we always talk about keeping your stops in place, because no matter what the situation is, you always should have your stops in place, and that way you keep yourself out of trouble when something like that hits the market. All right, so we're a little bit of pressure here on this market, at least for the time being. We got support down at the 10. That's our next support level. Funny thing was yesterday, I gave you, we were rallying in the morning. I gave you more levels to the upside and we started breaking, and I gave you more levels to the downside. And every time I gave you more levels, the market stopped going in that direction. I don't know if you noticed that yesterday afternoon, but right before we left, I gave you more levels to the downside, and that was the end of that break. So what does that tell you? What do I know? Anyway, I thought it was kind of funny. I mean, you didn't have to think it was funny. I did. All right, so our next support level is downside we have, and is a 10. Right now, we got a little resistance. I don't know. Maybe if you're aggressive around 30, it's our pivot. Only if you're aggressive. I mean, there's plenty of trades there. It all depends on how aggressive some people want it to be, and there's people who are a little bit more aggressive than others, which is nothing wrong with that. I've stood around a lot of traders, and everybody trades differently with their own set of dynamics. So yeah, that's what they're saying. That's why they're if you look at the chat, somebody put in what quote unquote the economists are saying about the decline in the GDP number. That it was a one-off, maybe. We'll see. We'll see. And then there was some good underlying demand, and I think that's why we're not in the gutter already. As far as I mean, we're selling off, but we're kind of trying to hold on to some gains here, however tight they are. But it was a very crazy, volatile market, right? Over the last, it's going to stay that way when the markets are going to the downside, especially when the fundamentals are overtaking the technicals. You do have an extension of a range, right? And when you get an extension of a range, you're going to get some more volatility. The only time that doesn't happen is when we're going to the upside, where they just don't move as fast when going to the upside as we do to the downside. I don't know why, but that's you would think it'd be the same, but it's not. All right, we are. Let's see if we have any other reports coming on this morning that we have to concern ourselves with. And if anybody has any questions or any comments, put them in the chat. I don't mind questions or comments. If you put them in the chat, we can answer them for you. There are no other fundamental news coming out this morning. So we do have the market is reacting to slow growth, which is already happening, i.e. Kind of a recession situation, which again, even though we have a negative number as we continue to downtick here in the first quarter of this the GDP here, they're trying to make it better, saying that there's some measures of like underlying demand showed strong growth. Okay, we'll see. But again, like I said, usually what the Fed would do in that situation, as we kind of quickly came down here to the, just around the 12 area there, and then pop back up, kind of missed our entry point by just a little bit, so be a little bit tenuous. The 10 there is a little bit tenuous. Again, maybe take the lower end of that range if you're trading because of the volatility. Okay, this is where we make adjustments to the levels, right? So we'll see. We'll see what happens. The other aspect of the market is concerned about obviously no growth or slow growth or lack of or recession with 2 quarters of negative growth. And then there's interest rates which are going up, which again, this is the dilemma that the Fed put themselves in, because usually when you have slow growth, you would want to lower interest rates, but we are way, way beyond that point. VIX is a solid 30 handle. And the other aspect is the war situation, which I gotta, well, let me just read this here. As the war in Ukraine goes way longer than Vladimir Putin appeared to anticipate, the Russian leader is getting increasingly aggressive. Moscow has cut off key gas supplies in Poland and Bulgaria, threatening to do the same for other unfriendly, in quote, nations that refuse to pay for fuel in rubles. Putin also issued one of the strongest warnings to date over the West interference in Ukraine as the United States and its allies ramp up weapons transfers, war financing, and intelligence sharing. Why Poland? And if you look at the chat, you'll see the levels that we gave out this morning. Again, we use those as a guide to the day. You're not leaving yet, are you? Usually that's a warning sign for me that you're gonna leave. Okay, good. I mean, you woke up so early. You don't want me. Why waste the day? Go back to bed. That's crazy. Again, if anybody has any questions, feel free to ask. Why Poland and Bulgaria? While there are some other countries that insisted on paying for gas in euros under existing contracts, the two nations represented the weakest spots on the east that have that are the first to get gas as it transits into Europe. The countries also happen to be among the first whose payments were due the soonest, though the strategy may also dim at dividing the European Union by targeting some nations and not others. Poland has additionally been one of the most critical nations of Russia in the West's alliance and has been one of the biggest supporters of Ukraine in terms of refugee and taking military support and weapons transfers. The Kremlin has outlined a payment mechanism that would allow foreign buyers to convert their dollars to euros via their federal bank there, the Gazprom Bank, an entity that has been carefully excluded from the EU sanctions. The state-controlled bank would send along rubles to energy giant Gazprom, which would then prevent Western governments from seizing payments made in foreign currencies and strengthen Russian sovereignty, according to Vladimir Putin. The EU has debated whether the scheme breaches sanctions against Moscow, as some countries make arrangements to comply with the new payment systems out of fear that the embargo or blockade could tip them into a recession. Well, that's a foregone conclusion right now. So, all right, we said that the 10 is a little bit suspect because of the way the market traded. At entry point, if you adjusted your entry point, it didn't really matter. Kind of ran through that too. So we had to be careful there because of the way the market traded as we quickly come down here. Next support level we have is down at even. Again, you have to look at the price action to help you with your levels and also deciding whether you want to take your trade or not. Definitely the 10 was tenuous because of the price action just prior to that. So you have to consider that in your trading, maybe trade it less. If you're trading multiple contracts, you cut down the size so that there's different ways of handling the risk and looking at the price action as we are getting extremely volatile here. Very whippy, as you can see. So again, if you adjusted, maybe you were able to stay in there. Maybe you got to put it in there at 8 or something, only because of and then it quickly popped back up here. Could you have done it at 8 instead of 10? There's a logical reason why you could have. Again, we warned you about the 10 being a little bit tenuous because of the price action just prior to that. You have to look at the price action to help you determine, what your trades are going to be, right? We just can't just ignore what's happening before a level gets triggered or not. And then it also is going to dictate how you handle that trade and how you manage that trade, right? So recognition of a trade is the one aspect, and then the execution and the handling of it is another aspect, which is important. So, all right, depending on if you canceled your trade there at 10, if you kept it in there, obviously you probably got stopped out. If you adjusted a little bit, maybe you were able to get in at a lower end and stay with it. Either way, different ways of handling that trade or managing that trade, I should say. Again, I warned you about the entry point on the 10 was a little bit tenuous, and I told you to make an adjustment. How you make that adjustment is totally up to you as an individual trader, right? Everybody does it differently here. Nobody does it the same. So let's keep that in mind. Everybody's got different risk tolerances, right? So you have to acknowledge that if you're trading. All right, so we did, we got down to 4 and change there and come back up. And again, very, very volatile. You get big 10 to 15 point moves very, very quickly. Obviously, we're trying to find those areas that we feel that will help us take advantage of those moves, but we are also at the mercy of volatility, right? And that's what we are trading off of. And remember, technicals are good for most part, but when fundamentals are in play, the technicals are not as strong as the fundamentals. So we are in that mode right now, where sometimes you're getting fundamentals and market reaction reacts to that quickly, much quicker than the technicals, and they are. You have to consider that when you're trading, and looking at the price action helps you consider that. All right, resistance right now would be around the 30 area still. Very, very whippy little trade here, at least for the time being. Again, if anybody has any questions, feel free to ask. You can put them in the chat. Let's see here. Tech is in demand this morning as futures, NASDAQ futures advanced, rebounding from an earlier sell-off in the week, powered by the earnings from Facebook. Shares of the social media soared more than 16% in after-hours trading on Wednesday, becoming the latest giant to join the earnings parade down on Wall Street. Up next, quarterly results for Amazon and Apple, which will complete the reports for big tech, or a group known as the MAMAA, MAMA. They used to be the FANG. Now, because Facebook changed their name, it's not FANG anymore. It's MAMAA. Meta, Apple. Whatever, you know what they are. I just can't write. It's like I couldn't remember the definition of the first one, so why am I supposed to? Microsoft, thank you. Microsoft, Apple, the other two big ones. Google, right? But it's not a G, it's an A, because whatever. They make they only make 300, and Meta is the first one. Yeah, they only make $390 billion a quarter. Ridiculous amounts of money. Archegos capital management founder Bill Hwang has been arrested in the United States a year after the collapse of his private investment firm sent shockwaves across Wall Street. Hwang and his CFO were specifically charged with 11 accounts of racketeering, conspiracy, market manipulation, and fraud, with the interrelated schemes to unlawfully manipulate the price of publicly traded securities in Archegos portfolio, and to defraud many leading global investment banks and brokerages. That's hard to do, by the way. Hwang also was convicted of wire fraud and inside trading charges back in 2012 when he ran Archegos' predecessor called Tiger Asia Management. In March of 2021, Archegos defaulted on margin calls from several global investment banks, including Credit Suisse, Morgan Stanley, Goldman Sachs. The fund had large concentrated positions in Viacom, now merged with Para, and Baidu and other stocks, but its use of total return swaps helped hide the high exposure from the lenders, as we continue to downtick here, looking at the even area as the next support area that we have. Archgo also uses as many as 9 banks, making it appear like different parties were behind the trading activities. Well, anyway, he's throwing. They asked for $100 million bond. Have you ever heard of that before? $100 million bond, and he's out on $100 million bond. That crazy? How much money does this guy have? $100 million bond, and he's out. And then he goes, he can't. Good morning, there, TG. What sources that I use? I get a newsletter that I subscribe to. Yeah, so who has 100 million? I mean, it's pretty amazing, right? And he says he lost his passport. So he had to. He couldn't. Had to give up his passport. That's funny. Anyway, $100 million, and you have to give up your passport. That's nice of him. All right, we went down to round 2 and change there, and coming back up here. So we're kind of missing our entry points by just that much on the downside. Again, be a little bit careful down there if we're going to be trading that even area. All right, very, very choppy little trade here, as you can tell. All right, a little resistance around the 26 area, 25, 26 area right now. If we get back up there. And again, the market is, at least for the time being, under a little bit of pressure, reacting to the negative quarterly GDP number, which was they're expecting a 1.0 pulse number. They came out at a minus 1.4, so a miss, even though there are some people who are trying to forgive it as saying their underlying numbers are stronger than they look. Whatever. Not a good situation for the Fed, puts them under continued pressure with their policy right now. Doesn't make it look good for them. But then again, this is what the Fed, this is the dilemma that they put themselves in. And it's creating a little bit of an issue, for at least for the time being. Again, if anybody has any questions, feel free to ask in the chat. Obviously, I do like questions, and I answered them. Okay. All right, we get a little bit of a range here. See where it wants to do. Maybe if we get above the 16, we push up to that 25 area. If you're tight little ranges here, but I mean, they're not tight. They're moving around. Very, very volatile little market here. Picking your spots is what we're trying to do. Be patient, wait for opportunities. Yesterday, like I said, we like to average 4 or 5 trades a day. Yesterday, we were exceptionally over that, so we were closer, probably easily 10, if not more. I mean, it was just we gave you more levels on the upside, and then all of a sudden we had to give you more levels on the downside, and it was that kind of trading day. And then, of course, they had a nice rotation and rally off of those opportunities. And well, we'll see what happens today. Like I said, every day is a new day, and it's all right if we don't trade so much. Yesterday, we traded for worth a couple days of trading. Not that I don't mind trading. I do. I'm here every day. As a matter of fact, you're talking to somebody who actually, I'm talking to myself. You're talking to somebody who is actually likes to trade a lot, but has to dial down the number of trades I put in there just because you have to. If you're picking your spots and waiting for good opportunities, last thing we want to do is to overtrade and give those brokerage houses all that extra cash. Yes, you are definitely in vacation mode there, Philip. Enjoy your little time. I'm glad you joined us. Are the charts frozen? Yes, they are. So thanks for letting me know. All right. If we are trading, if we get above the 17 area, you definitely don't want to be short anymore. Maybe we'll look for a push up to that 25 area. All right, now we come down here to the even area again. How you enter your trades and how you manage them is totally up to you. We said they're a little bit tenuous there in regards to the way it traded just prior to that. So maybe getting in at a little lower entry price would adjust to the dynamics of the trade, or canceling the trade altogether. Those are all options that you have, but we definitely, unfortunately, are having the same situation as we did with the 10. Kind of just stopped like right there, right before our level, and then that level became a little bit more tenuous. Obviously, we're not going to be perfect all the time, so that's why we have to make adjustments and understand that the price action is going to dictate those adjustments for us. So we kind of thought that this might be happening. That's why we suggested getting in at a lower price, or not even getting in at all, or definitely lightening up the load and not keeping your usual amount of contracts that you're trading. It just You just have to understand what's going on with the price action and then react to it, because we're not going to be perfect every time. I wish we could be, but we're not going to be. And like I said, maybe you adjusted down here to 98 based on the difference, or even you canceled it altogether and waited for the next level on the downside. All of those are options that you have as a trader. I tried to point out the fact that we definitely have to make an adjustment there to the even because of where it stopped. Like I said, we missed it by a couple of ticks there, so obviously it became a little bit more tenuous. So we're just working. If you're in a little bit better, if not, you're waiting for the 89. That's fine. Again, we're trying to manage risk here and minimize it as much as possible, but there's always going to be risk in trading. And we just try to adjust it to the market conditions, and sometimes it works out perfectly and sometimes it doesn't. But hopefully if you adjust it a little bit, maybe you're in at the lower end and you're working the lower end here just a little bit, giving you a little bit of an opportunity to work this order here instead of just getting stopped out. And again, even if you did get in and you don't like the price action the way it's working right now, you definitely have choices as to want to, get out, maybe lessen the load if you have multiple contracts. If not, just, again, everything here is based on your risk tolerance, not mine or not somebody else's. Can we repeat the levels in the chat again, please? As we continue to, there they are. Again, you have to look at the price action. You have to see what's going on with the market, and then make adjustments. We warned you that the market did stop at 11 and change there. So obviously 02 and change, and then obviously the even became a little bit more tenuous. But that's why we talked about making a little bit of an adjustment here. Maybe if you got down to 98, or even if you got in there afterwards, you're getting a little bit of a play, but you're working the order. And again, if you don't like the price action, you have choices to get out, look for a little less profit, scratch it, take a little less loss. You don't have to wait till you get triggered on one side or the other if you don't like the price action. Since we're trading price action, those are the choices that you have. Next support level we have is down at 89. All right, we continue to downtick here, looking at the 89 as our next good support level that we have. We've had to work some of these areas. We had to adjust some of them. It's a little bit different. Every day is different, right? The goal here is to make sure we always come back tomorrow. That's what we're trying to do. And making sure you keep your stops in place is one aspect. Adjusting, canceling orders if you have to, adjusting entry points. Those are all part of the your job as a trader, based on the price action and what the market is telling us at any particular moment in time. All right, there we got down to 92. 92.75 there, and popping back up here a little. Again, we're not going to be perfect, and sometimes we have to make adjustments. That's what I keep talking about. And but we're still kind of whipping around here. We have no other numbers coming out today, so it's basically just trading whatever the reaction to the GDP number. Right now, we got resistance around 23 to 25. The next support level is down at the 89 still. All right, nice little pop back up here. Get down, so like I said, to 92.75, and then popping back up here a little. Resistance would be around the 23 to 25 area. All right. Well, things have slowed down just a little bit. Again, trying to find entries, trying to find if you're trying to find a level to get short, we have to wait for the market to kind of give us those opportunities. That's what we're waiting for. We can't just say, oh, the market's going down, let's try to sell it someplace where at least we need a good technical area to feel a little bit more confident in putting in that trade. So we have to be patient and wait for it. And even then, we might be wrong, right? That's why we keep our stops in place. It doesn't matter. You just have to find good technical reason to enter your trade, and then let the market kind of do its thing after that. All we can do is find reasons to trade, and then let the market kind of dictate what is going to happen after that, because we have obviously don't have too much control over that. But we should feel confidence in the trades that we're looking for. That's what we're trying to do here, is to give you confidence in entering trades, adjusting trades based on the price action, and looking at the price action to help you with your exit strategy as well. Again, if anybody has any questions, feel free to ask. We are trading mini S&P, scalping the market, looking for opportunities based on the levels and price action. So we put together a education course that teaches the methodology of being patient, waiting, and scalping in these tough little markets that we're getting, especially when the markets are moving as fast as they are. You have to be very, very patient. All right, Julio, good job. I like it when people leave early. Again, we focus on the morning hours, and really, if you've made your goals for the day or your targets or whatever they are that you're trying to make, the trading the whole day gets a little bit tough. The dynamics definitely change in the afternoon. And like I said yesterday, if you were trading, or if you saw some quick move right around 12 o'clock when there was an erroneous news item that was put out there about Facebook's earnings that were wrong and created a quick push to the downside there, and then, like I said, it came right back up. So it was like they had to, it was very that would be just a choppy situation that gets most traders in trouble, and that's what we try to stay away from. As far as the GDP, now only 5 analysts out of the 70 today that they asked about what they expect the GDP number to come out today, expected to have a negative number. So that tells you something about those analysts. All right, you can see we're a little range bound here. When it gets like this is where we kind of just wait for, we got resistance at 25 to 23 to 25 on the upside, and then on the downside right now, next support level is down at 89. So kind of in the middle here, you'd be guessing as to how high it's going to go, whether it's going to stop, whether it's going to, you want to trade the range game, you good. Just make sure you have your exit strategies in place. Again, if anybody has any questions, bonds here, they're a little bit of pressure today. Again, I think they rallied based on the negative. They rallied wrongly based on the negative number that came out of GDP, because you would normally think that they would lower rates, except we're definitely not in that mode. And this is where the big dilemma comes into play here, and what the Fed has to deal with. We talked about the hard landing or soft landing, and or there's just no landing. It's just free fall. Who knows? All right, little push up here, a little resistance around right now the 20 to 23 area. Anything above 26, 7, you want to be out of any shorts. All right, and they're trying to rally here a little bit, but the resistance, like I said, would be around 20 to 23. Anything above 27 out of any shorts. Again, whatever trade is, you gotta trade it according to your risk tolerance. Some like those trades, some don't. You don't have to take every trade that's out there. The most important thing is to find the trades that you feel comfortable taking. You can recognize the way it sets up and then take advantage of it when it presents itself. That's the most important thing. Not what somebody else is telling you or anything like that. And we talk about different kinds of trades in our education course. You have to find those trades that satisfy your risk tolerance as well as your mind, where you can, your mind's eye, I should say, where you can just recognize them when they develop and start playing out. And then that way you can take advantage of those trades. People here take all kinds of trades because they see different trades, you know, and different, maybe different times brackets of different bars that you use creates different opportunities. And there's not here, and nothing's the same here. Just want to put that out there. But we would like to limit ourselves to about 4 or 5 trades a day, and that way we kind of keep our money to ourselves and not have to deal with putting a lot of money over to those brokerage houses. Mark, you're going to be here tomorrow? And we can join in with Don tomorrow and we'll have a little chit chat in the morning since it will be Friday. Oh, well, I'm gonna wear your sunglasses too. Yes, sir. Don's so happy you're back, that's for sure. All right. Again, just kind of coming back up here a little bit. Be careful there. Right now, I would look at the 20, anything above 26. You want to 26, 27, you want to be out of any shorts. Let's put it that way. We get above the 27, I think we might have a chance of rallying back up to those interim highs that we had. And then we'll worry about the upper levels that we have after that. But at least, so kind of pick your, if you're looking to sell it, pick your spot there with knowing that if we get above 26, 27, you want to be out of any shorts. All right, things have slowed down here a little bit. Nothing wrong with that. Yeah, again, we are waiting for opportunities. Yesterday, like I said, yesterday we way overtraded. Not because we wanted to, just because the market was moving around. So today, taking a little bit of a breather, even though we already traded a few times already. And again, we had to, and if some of you did, some of you didn't, if you didn't make those adjustments. If you did, I don't know. We're trying to tell you to help you to try to make those adjustments based on the price action. Well, you can see they kind of just stopped up there right around the 14 area and come off. We were looking at the 23 area, but that didn't happen. We're just kind of a little range. You can see we're maybe turning in this little range. I don't know if we extend or not. But if we do, we're looking at the 89 as the next support level. Okay, that sounds okay. All right, there are the levels again that we're looking for. We came down here. Again, we're just missing our entry points by just that much. Got down there to 91. And where's that kind of day today? Right? It's just that kind of day. Maybe you adjust. Because I keep not adjusting. Well, if you adjusted, then you did okay. If your entry points are different, at least 2 points above and below, we're doing okay because I keep missing our entry points by just that much again. So we got down to 91 here and then rotated back up. Again, if you are scaling differently, then you're definitely got filled down there and you definitely had a nice little rotation back up. So I did not get it there. I had it a point above and below, but I can, now that point above is definitely out. It is what it is. All right, so it did go down there. Really, I hope somebody doing the right thing today. I keep missing it by just that much. Don probably had it. And again, so it's kind of the same thing we've been talking about. You have to be a little bit careful there around the 89 based on the price action here. Coming back down here again. Again, be careful there around the 89 if you're still have it on there. Maybe a little bit of an adjustment. Again, you got to look at the price action and understand what's going on and making those adjustments and dealing with that. All right, coming down here to the 89 area. Yeah, definitely trading some size in there, that's for sure. All right, if you did make an adjustment a little lower, maybe you got filled there, getting a little bit of a pop back up. Again, and if you didn't and you canceled the order straight up, that's fine too. Nothing wrong with that. All right. That's finally a good rotation there. Again, like I said, I had made the adjustment a little bit lower there. So I stayed in with my 88 against the 89. I got a little bit of a pop back up here. It could. It'll be my backup. How's that? Again, if you're working 89 here, definitely very if you did get in at a better price because of the price action, totally get it. Maybe you were able to take advantage of that adjustment. And if you did, that's fine. If you didn't, and you're going to wait for 80, that's fine also. All right, I'm going to give you some more levels here on the downside. Below the 80, we've got 72, 63, 49, and then 37. 72, That is quick. If you look at the chat, they are there. Thanks, Don. That's why we work together, Don, so well there. It's quick, man. That was quick. No, no. I'm saying thanks, Don, for another reason. Not for the easy does it. You guys got me. Sorry. We got to 85 the same time I said thanks, Don. Easy does it. Not taking anything away from Marky there for putting out those levels right away. All right, next support level we have is down at 80. I mean, do you think I don't look at what Don says all the time? I always look at what Don says. When he's not putting up levels, I'm saying. All right, so we got levels on the additional levels on the downside. And we'll see where that takes us. Remember, every time I gave you additional levels yesterday, that was the end of that move. I don't know if that's going to happen today or not, but we'll see. Oh, you both of you jumped on me. Jeez. Sorry, I was doing two things at once. Oh well, yeah. Well, you know me. You know me. I'm not going straight up on anything. Never works for me to go straight up. But I get you. It's frustrating when that happens, doesn't it? Or even when I don't go straight up and I don't get filled, and it's just like a tick away. It's like, what? With all the volatility that's happening, you would figure, how do you just miss it by a tick? Right? All right, we're kind of staying a little bit weak here. Next support level we have is down at 80. We gave you other levels of interest on the downside. And there they are for you. We are here to try to be patient and pick our spots. And always wait for opportunities to trade. Sometimes the market gives us few opportunities. Sometimes it gives us a lot. Either way, you have to always adjust to the price action and what is going on in the market and the dynamics of the trade at any given moment, and then adjust to it accordingly. All right, next support level is down at 80, and got down at 82.5. I'm having fun with this today. I mean, look, all we can do is laugh. Other days we're going to be perfect, and some days we're not going to be perfect. We have to manage it. And that's one of these days today where we are managing our entry points, adjusting our entry points, tweaking it, maybe not trading as much because we missed it by just that little. You have to wait for the market to kind of help us out in the right situation. When it's not, just don't get upset about it. Just adjust it accordingly and wait for the right proper situation to help you stay on the right side. Patience is very important. We talk about that all the time. And obviously adjusting to market conditions is another important aspect of trading, especially since we are trading online and everybody can do that. When I was trading on the floor, I didn't have that ability to adjust to market conditions. Sometimes I was just forced to take whatever was handed to me, good or bad, because that was my job. And now, though, you have a choice. You can say no, you can cancel trades, you can adjust them, you can tweak them, all based on the dynamics of the trade and the fluctuations in the price action. Again, if anybody has any questions, again, feel free to ask in the chat. We focus on the morning hours to give us our opportunities. Again, we like to average 4 or 5. We've been obviously doing that very easily these days with the market's volatility. So ask any questions if you like, because we also focus on the morning hours to help us with our entry points and opportunities. All right, right now we got resistance around the 05 area. All right, market popping back up here a little bit. Again, right now we got resistance around the 05 area. Anything above 16, 17, you want to be out of any shorts. I mean, I did give you more levels to the downside. This could be it as far as any break is concerned. I don't know. Yesterday had that. I did that had that effect on the market. All right, we can see the market is very, very choppy here. Got to be a little bit careful. Pick your spots. The tendency is wanting to trade, but you have to have a good reason to get into your trades. Our support level is down at the 80. Of course, it got down to 82.5 here. We are just kind of missing it by just that much here today. So again, it's up to you if you want to make an adjustment, adjust your number of contracts. The market is very volatile. VIX is at a 31 handle. Right now, we've got resistance around the 05 area. All right, again, a little choppiness here, so patience is important. All right, market upticking here a little bit. We've got some resistance around the 05 area. And I think if we get like above the 16, 17, we might go a little bit higher. All right, market uptick in here a little bit. We got a little resistance around the 05 area. All right, coming up here to the 05 area. We got a little bit of resistance up here. See how it wants to handle this little opportunity for you. Again, you're scalping these markets, taking whatever ebbs and flows, trying to take advantage of ebbs and flows. Again, just keep your stops in place no matter what. Obviously, I gave you more levels to the downside. Usually that stops the market pretty good. That's what's going on here, right? We definitely stopped a little rotation to the downside by giving you levels. Amazing how that happens, right? Did it 2 days in a row now. And working if you wanted to get short, if you're looking at an area to scalp, we're trying to work this 05 area here a little bit. Excuse me. All right, getting a little bit of rotation here against our 05. Again, you remember you're scalping these price action plays, maybe like taking 2 or 3 points out of these. It's a little different than the levels. And also be considerate of the price action. And if you do want to get short, then you can obviously try to stay short, see if we go back down. Either way, whatever the situation is, you have to make that determination. All right, nice rotation here against that 05 level that we talked about. Again, took a little bit of time, but patience, but that did work out okay for us. And if you're trying to stay short, then have a trailing stop or put a stop in there above at 7 and see if we can't rotate down. Again, how you manage your trade is absolutely an independent thing. Just giving you different ideas of how to deal with it. Everybody does it differently. All right, there we go. We gave us a chance to scalp it, rotate it down, and now we're popping back up here. Next level of resistance we have is up at around the 15 area. But remember, I said if we get above 17, you definitely don't want to be short anymore. All right, a little rotation back up here to the top side. Again, if we get above 17, definitely don't want to be short anymore. If you're going to trade the 15 area, just keep your stops in place. All right, working this 15 area right now. If you are so inclined, again, keeping in your stops in place here and also scalping the market. We're not trying to hit home runs here, just trying to find opportunities to scalp. Give you an out there above 17. So if you're in here trying to get a nice little rotation, then make sure you keep your stop up there above 17 and see what happens with the market. Right, if you got in there at, again, if you scaled in there, maybe you got in there at 14, got a nice quick 2 points out of it. Again, if anybody has any questions, we took a little bit of time there and was patient, waited for opportunities. At least they did finally present themselves. But we had to wait for them, and nothing wrong with that, as long as we can be positive with it. Now, if we get above the 17 here, look for a little bit of a push. Next level we have is up at the 25 to 30 area. But then, like I said, if we get above 27, though, we could definitely, maybe push a little bit higher to the highs. All right, if you got in there at 15, if you waited for the 15 and you got filled now. Again, a little bit of rotation here against it. Again, keep your stop in there at 17. Definitely want to be out of anything around that. And trying to give us a couple of, there's our 2 points there against the 15 area. All right, nice little trade if you did get in. Again, now let's be a bit patient here and see what happens if we get above the 17. Be careful if you're trying to stay short. I would put your stop in there at 17. If it does rotate back down, 05 would be a good cover. If we get below 95 on the downside, we could go retest the lows. All right. Well, at least these couple trades here worked very nicely for us. And hopefully we were patient enough and waited for the opportunities to get triggered. We gave you the levels on the areas on the downside and the upside that we're looking at as far as extensions. If you look at the chat box area, you'll see the levels that we gave you as a guide to the day. And we'll use those to give us our, obviously some of those levels have already been triggered, so you have to be on the upside, they haven't, but the downside you have to be a little bit careful. Those are more price action plays until we get down to the 80 area. That'll be our next focus as far as those levels are concerned. All right, get back here in a bit.
Hey, quick shout out and a couple programming notes. Hey, Bill T, how you making out? Let me know in chat, Bill T. Blas, hey Blas, how are you? I haven't seen you in a while. Edward, let me know if you want me to post the links to stay. Hey, Glenn, Hugo, Philip, Robert. Hey, Robert, how are you? Rose, Zahurl, everybody else. Let me know how we can help you. I'll send out the link to sign up. That's out to everybody in chat. TradeAlongLive.com is the link to come in and sign up for the Zoom webinar. This Trade Along Live session on a daily basis, starting a little after 9 a.m., going to about 11:30. We keep it open after through the afternoon session. There's a lot that goes on here, both publicly and privately. If you want to be part of it, let us know. Just make sure that you are signed up as a subscriber to this service, this Trade Along Live session. Trade Along Trading Academy is the website. Check it out, tradealongtradingacademy.com. If you like what we're doing here, tell your friends, and we appreciate you being here.